Here to discuss the challenges and opportunities in commercial real estate, Peter Merrigan is the CEO of Taurus Investment Holdings. They're a global real estate private equity firm. They've got everything from industrial to office and multifamily. Peter, welcome to Power Lunch.
Thank you. Thanks for having me today.
Is this just a case of, office being under pressure, or do you think that there are cracks showing everywhere?
There is some cracks showing, I'd say, but it really is more office than anything else. That's what's really struggling the most. Industrial is doing fine. Big box is starting to slow down a little bit in industrial, but last mile industrial, which we own a lot of, is doing better than ever. Multifamily is kind of flattening out a little bit. Hospitality is doing really well, but office is tough.
Yeah, and office is so tough that people are trying to figure out if these loans are going to be made whole. And so far, we're seeing a lot of people just sending back the keys. And whether it's banks or REITs or even life insurance companies, they're going to be. How do you think it's going to trickle through their businesses?
So, office is really facing a number of headwinds with, there's less demand, first of all. And it depends on what kind of office you're talking about. If it's R&D space or, pharmaceutical type of space, things like that, there's still good demand for it. But if it's just conventional vanilla box, putting a lot of people into a space for office, there's not that much demand for that because of the work from home dynamic. And also the economy is slowing down. So that's really tough. And you have to spend a lot of money to release those spaces. So as those start to empty out, the re-tenanting risk is pretty significant. And then, of course, it requires, significant amounts of capital to put new tenants into place. And as interest rates have gone up, et cetera, it's really a capital crunch for those landlords. So that they're making those decisions, whether they walk away, whether they make that investment to hold on to their assets. But it really depends on the market. It depends on the situation with the individual tenants. It depends on how highly leveraged they are. So it's not kind of a one-size-fits-all problem. So you're not seeing this huge wave yet because a lot of borrowers are kind of fighting it off. But eventually, if this continues as it currently is, there's going to be a wave happening. And I think what's going to really trigger it is not so much the banks and the insurance companies, because those are balance sheet lenders, but it's going to be more the commercial mortgage-backed security lenders who don't have flexibility.
You do business across the U.S., you do business in Europe as well. But as you think about the U.S., I can well imagine that there are certain cities that are doing just fine, whether it's Miami or Austin or Tampa or Orlando or Charlotte. But then there are some major cities where the urban cores are not the same kinds of places they used to be. San Francisco, Los Angeles, Chicago, even Manhattan. How are you factoring that in, and is that worrisome to you as major employers consider maybe leaving or downsizing in those urban cores where quality of life issues are so stark?
Yeah, I think it's a huge problem. I'm based in Boston, and Boston is not the same as it was pre-pandemic, no question about it. The downtown is not as vibrant. There's not as much going on in the individual office buildings. That doesn't mean that demand is completely evaporated. There are people coming back, and there is some occupancy that's going on. Traffic is picked up, things like that. But yeah, I mean, it's tough out there in those major centers that you talked about, San Francisco in particular. Anything that's heavily tech focused is really going to face a lot of headwinds. And that's without even discussing AI and how that's going to impact the job market in the tech sector as well.
Yeah, you must feel good. 80% not office in your portfolio for now. Peter, thanks for joining us today. We appreciate it.